Hey guys, what's going on? Welcome to the video. So we had some big volatility in stocks this week as the market had its first real pullback that it's had in months. In this video, I'm going to be going over how far this pullback could go and where stocks may bottom at, and also the top 4 trade ideas that I'm watching in the week and weeks ahead. As always, there are timestamps in the description. Let's go ahead and get into it. So starting out by taking a look at the S&P futures chart. Last week we went over how 5708 was the key resistance and buyers needed a break and hold above there for the market to break out and head higher. The market attempted this, as on Monday and Tuesday of this week, there were 3 different breakout attempts, and all of which failed. So failed breakouts like this are a sign of weakness from buyers, and this led to a break below trendline support, which started downside, and after consolidating for a bit, it then broke below 5630, which was the key pivot that we went over last week, which would act as a large downside trigger if broken below. So after this, it led to continued downside follow through and close at an interesting spot to end the week. 55.85 was the top of the previous range and triggered the range breakout in early July, and 55.60 to 55.67 was also a key zone slightly below there. Price closed below both of these supports and now is within that previous consolidation range. The key support and bottom of that previous range is at 54.90 to 55.10, which if it gets there without a bounce first, it is highly likely for a strong bounce off of it at the minimum, potential for a full reversal as well. A big reason for that is the oversold signal that we're seeing, and it's the first time that the S&P has been oversold like this since the end of May. The best indicator that I use for oversold signals is the RSI on the 4-hour time frame, as it very often will produce a reaction from the market. As we can see, each time that it's been oversold this year, there has been a reaction from buyers, and all but one of these instances was at or near the bottom of the pullback. To put it simply, in bull markets, oversold dips will get bought up. Now maybe this drop goes further and leads into a larger market correction, but in my opinion it's very unlikely that the bull market ends here, and chances are this dip will end up getting bought back up. So going into next week, the key pivot levels to watch on the upside are at 55.85 and 56.30. Above 55.85 would reclaim back above the top of the previous range and trigger upside, and above 56.30 would reclaim the breakdown level from this week. A reclaim and hold above 56.30 would likely mean that the pullback is over and head back towards highs. On the downside, the next key supports below are at 54.90 to 55.10 and 54.53 below there. Both of these levels would be strong conviction for at least a relief bounce, especially if there is not a bounce first beforehand. If the market sees continued downside, it will not be in a straight line down, and there will be plenty of tradable bounces if that is the case. And when you're in doubt, just zoom out on the chart. This is nothing more than a healthy pullback in the grand scheme of things, and we continue to be in a bull market until proven otherwise. Maybe this pullback bottoms next week, or maybe it goes deeper to the 50-day moving average, or a little below there. Overall though, this dip will get bought up most likely. It is highly likely to continue upside afterwards. Alright, so now getting into some trade ideas for the week and weeks ahead, starting out with Tesla stock. So Tesla has a few major patterns and areas of interest to trade on the chart. So the first is a long-term trend line, which it broke out above in early July. This is a major breakout if it holds, and the backtest point of this trend line would be at 223 to 225, which would act as key support if that gets backtested. The second is key resistance at 265, which was the previous swing high in the spot where this rally rejected so far. And the last is 200 to 207, which was the range breakout trigger, which reduced that recent large upside move, and this is also lining up with both of the major moving averages. The number one scenario that I'd be watching for would be something like this, where it pulls back a little further, backtest the trend line as new support. If it successfully holds, this can start to build out a cup and handle pattern, with this part being the handle, and 265 would act as that major breakout point above, and we could see a real explosive move above there. Or if it was to fail below the trend line, 200 to 207 would also be a very attractive risk-reward entry point for a dip buy. Overall, this will make for a great opportunity soon in my opinion, and that future breakout above 265 has a chance for a very explosive move for the stock. So Bitcoin and any stocks associated with it, such as miners and Coinbase, should also be at the top of everybody's watch list right now. So the big picture of the Bitcoin chart is that it has built out this multi-year cup and handle pattern, and it has been building out the handle of this pattern since March. The Bitcoin ETF, ticker symbol IBIT, has also built out a very simple IPO base with these 2 well-defined trend lines. Above that upper trend line can start the breakout, which will likely be to a new all-time high. Bitcoin and crypto are finally starting to get some political tailwinds as well, as Trump is going to be speaking at a Bitcoin conference later this month, which many are looking at as a big positive for the space. And his recently announced running mate, JD Vance, is big into crypto, His filings show that he owns a lot of Bitcoin, and he has, quote, championed crypto as an alternative to mainstream finance. This could all set up to see Bitcoin start moving big once again. TOST, ticker symbol TOST, is another one to watch, as it's testing the breakout out of this more than 2.5 year long base. It also showed big relative strength versus the market last week, which is notable, as stocks that hold up the best during pullbacks will often explode higher once the market bounces back. So 27.85 is the top of the range, and this can act as the breakout trigger on a break and hold above there. And the next major upside targets above there would be at 30.8 and then 40 next. And Mercado Libre, ticker symbol MELI, is one more to keep on close watch as it nears the apex of this close to 4-year long wedge pattern. It has actually attempted to break out of this wedge 3 times, and in the process it has established a new trendline resistance slightly above there, which I'd be watching to act as that true breakout trigger on a break above. This is currently around 1760 as of now. So the stock looks to be building out a consolidation slightly below there. There's a lot of energy built up for when it does break. It can result in a very explosive move higher. So that is everything I'm watching for in the week ahead. Expect volatility, but a relief bounce at the minimum is very likely to happen next week in my opinion. I'll catch you guys next time. For anybody interested in joining the private Discord chat, that is the first thing down in the description to get my personal trade alerts, nightly watch lists, and answer any questions you have in there. Good luck trading the week ahead, and I'll catch you guys next time, and peace out.